All right, let's talk about finding lucrative businesses that you can acquire if you are a strategic buyer, a private equity group, search fund, any person or institution that wants to buy more assets, build a portfolio of companies, and then sell them for much more than they acquired them for. For those of you who don't know me, my name is Marco Palmero. My company Ulysses helps institutions in finding deal flow, finding investors, and building a pipeline of deals. We act on your behalf so that you can spend all your time closing deals instead of finding them. You can basically allocate all your resources towards the high value activities instead of spending them on building systems and sourcing opportunities. So I had a few conversations lately where people asked us, are you a broker? No, you probably are confusing what we do. We're not an intermediary. We act as an extension of your team so that you can get more deal flow, build a pipeline that is consistent over the short, long, and medium term, and ultimately close more transactions. Find that first multi-million dollar deal that you want to buy, or the second, the third, the fourth to build your portfolio. So let's break down a very comprehensive strategy for finding deal flow that we can leverage to ultimately tap into any possible avenue for getting opportunities. I had my coffee here because we're going to need to talk about a lot of things. So we need to get, my brain going. So the first point that I want to touch on is we need to cover when we go about sourcing deals two parts of the market, on market and off market. And the two operate in similar ways. The only thing that changes is the way we use certain instruments and certain channels for reaching out to people in the type of message or the type of approach that we take to connect with these individuals. So for on-market transactions, there are a lot of ways you can source deals. You can have a funnel for brokers, a funnel for investment bankers, a funnel for networking events that might generate opportunities, although those might not necessarily be considered on market, but whatever. And then you might have other avenues of on-market deal flow. You might know communities where businesses are listed and all these sorts of things. So on the flip side, when we talk about off-market, we mainly discuss reaching out to business owners, but at the same time, there are other ways you can find off-market deals. It might be reaching out to accounting and legal firms, professionals, bankers, and so forth. So when we first look at building a very organized structure for finding deal flow on behalf of clients, we generally break it down into different silos that are going to then communicate with one another to achieve the maximum and the better possible result. So on market, off market, you're going to need to understand first what type of channels do you have available in both areas, and what are the ones that you want to leverage. One of the mistakes that I see a lot of people making, and it's kind of like what kills their chances of getting quality deal flow and sourcing more deal flow, is that they just focus on a few of these and they don't tap into all the possible avenues that can enable them to get more deal flow, get lucrative businesses to buy. And that is done for a variety of different reasons. In my opinion, a lot of it is laziness and being accustomed to doing things in a certain way because that has worked for you in the past. Well, in reality, being open-minded and very flexible in a way you source deal flow is actually key, because markets change quite a bit. And in some instances, you might find solutions that work this quarter that didn't work before. And the adaptability that you have ultimately enables you to get deal flow before other people or get better deal flow compared to other folks. And given the composition that is growing consistently in the market, especially in the United States, this becomes a key priority. And for all of you listening, thinking about building this stuff in-house might be a solution, but you should really consider the cost associated with it, because maybe you're hiring 2-3 analysts, 80 grand each. That's 250 grand a year in overhead. it might be worth it for you, but still you need to train them. You need to make them understand how you want the process to be run. Well, instead, you might have a much better time outsourcing that to somebody else and maybe pay a tenth of what they, these analysts are paid, and get the results much quicker. So again, all these are considerations for how you get it structured. But let's get back to the kind of like pipeline that we want to build for finding lucrative businesses for sale. So on market, off market. The way we're going to reach out to people is different because, of course, for on-market deals, we're mostly going to be talking with intermediaries, and we're going to be interacting with them to get the opportunities that they have available. Now, in my experience, it is actually a very good idea to build relationships with these folks and find the ones that are actually able to deliver for you, so that you can then work with them only. Because you can just spend a lot of time browsing through listings or talking with a bunch of different people that you don't know directly. But in most instances, they're not going to give you access to those premium opportunities before they hit the market. And that is something that can prevent you from, finding the good deals when they are available, or maybe getting a preferential bid in before other folks get to see the deal. So when it comes to on-market deals, my approach would always be, let's first scan the market, find a few people that we can build a relationship with, and then cultivate that relationship for the long term so that they can give us access to some of the deals that they have before they actually hit the market, so that we have an advantage from that perspective. How would I do that? Well, I would leverage the same infrastructure that we build for off-market deal, just flip it into the on-market arena. So we would create a list of prospective brokers, investment bankers, and people that might have deal flow available. We'll reach out to them through a variety of different channels, and then connect with the ones that respond positively, start building the relationship, build the trust, and kind of like present my thesis or the type of firm that I run, and establish credibility with them. Once we have that and we have a network of people that we can work with, then it becomes a lot easier to interact with them on a weekly or a monthly basis to get opportunities from them. And that is sort of like, I consider that as almost building a network of affiliates, because you are fundamentally establishing a relationship not for one-off transactions, but for long-term deals. So it's like, I'm working with you because I'm planning to do multiple acquisitions. Therefore, we're going to do business multiple times, and we want to have that kind of relationship where you come to me because I'm making you close a lot of deals. So that will be the objective, and kind of how I would structure the funnel. So it will be top of funnel. We find anybody that might have access to on-market deals, investment bankers, brokers, anybody that might have businesses that are publicly available for sale. Then we reach out to these people, multi-channel, and for the ones that respond and that have some sort of interest, we then qualify the ones that are suitable and that can ultimately, build a relationship with us. I would not leave the guys that didn't respond or that were not interested at a specific point in time out of the equation. I would just put them into a separate category that might receive further messages and further communication from us using a slightly different touch to potentially build new relationships later. So this is not like a one-off exercise. It's like we build a pipeline that becomes sustainable over time. And it's fundamentally the same approach that we used for on-market deals and off-market deals, flipped to the on-market arena. In that case, we're nurturing relationships with intermediaries because we know they're going to be the guys that can bring us opportunities. And to some respect, you might say, well, my existing network or network in general might also be part of on-market deals. Although it's kind of like a gray area, sometimes we can consider it as an off-market. kind of avenue, especially if you trust the guy a lot. But before you have that type of relationship, you need to build that. So you might want to reach out to a lot of folks beforehand to build that network and then establish the credibility to get access to preferential deal flow. So on market, pretty straightforward process. Reaching out, qualifying, building a relationship, and then keeping in touch with all these folks so that you can get on market opportunities. So nothing too fancy there. Off market becomes a little bit more complex because it is a question of what is the industry that you're reaching out to and how would you like to interact with these people. The strategy really becomes bespoke to the type of business owners that you want to find. Size, geography, specific sub-industry are all relevant metrics and variables that we want to keep in mind when we build this pipeline, when we build the messaging, when we build the way we're going to qualify them, because not all people are going to respond in the same way to the way we reach out and qualify them for buying their company. Two examples I can give you. If we have a off-market origination system that finds marketing agencies that we want to buy, it might be totally fine for us to have a qualification process through a questionnaire online, or maybe directly embedded into the calendar that we use to book calls with motivated sellers, because these folks are mostly going to be working online anyway, so they're quite accustomed to forms, and unless they're super old, they might be pretty okay in filling out a form and sharing some basic information before we actually get on the phone with them. On the flip side, if we're working with plumbers and we want to find plumbing companies for sale, these folks are not going to give a fuck about a form. I mean, most instances are going to be on jobs every day, and the best that we can do when we want to qualify them is maybe take a 5-minute call with them when they're available to understand their interests, their motivation, and whether or not they're actually a good lead or a good prospect or not. So a lot of the way we structure funnels when it comes to off-market origination will depend on the audience that you're trying to address. That is less the case for on-market deals, simply because brokers, investment bankers, and people of this kind are more accustomed to receiving inquiries. So they are in the industry anyway, so most of them are going to be familiar with how the business is run, and they know that people are going to reach out to them to buy companies. So we can be more generalists in that approach, although segmenting them, if they're focusing on specific niches and specific sectors, can also be quite beneficial, because we can then create personalized messages that are going to resonate with them a lot more, thereby increasing our chances of, one, getting replies, two, building lasting relationships, because we're not just blasting messages, but we're looking to build a genuine relationship. So these are some of the things that we want to keep in mind when going off market. And another point that we want to consider when going off market is that we also might want to add into our system other audiences that are not necessarily business owners. And here's where we get really into the complexity of off-market deal origination, because a lot of folks believe that reaching out to business owners is the only solution, right? Or maybe using decision makers as kind of like your target audience. But in reality, there are a lot more folks that we can tap into to source opportunities and find deals that might be good for us. I'm thinking, as I mentioned on the beginning, about lawyers, accountants that might represent companies, and they might be the first to know that the owner is looking to sell, thereby making an introduction. I might be thinking about bankers, financial planners, wealth advisors, anybody that has some sort of tie into a specific business or is supporting businesses in doing something, might have more information than we do, and therefore might be a very good contact for getting us access to DealFlow in some way, shape, manner, or form. And so when it comes to off market, the process is a lot more complex than it seems. So it's like, okay, we want to find deals in The healthcare sector. Okay, first we're going to talk with all the business owners in the healthcare sector within a certain geography, within a certain size. We can use employee count as a proxy or something else. We're going to talk with these folks first. Then we can take it a layer down, maybe talk with executives in these companies, CEOs, CFOs, COOs, general managers that might not be business owners. They might just be partial owners, or maybe not owners at all, but they might have a direct connection with the owner, thereby being able to get a feedback, for us. Additionally, we might say, okay, let's also build a system that reaches out to all the company representatives, like accountants, lawyers, wealth managers, and so forth, in a very different way, so that we can connect with them and see whether or not they have companies they're representing that might be interested in a sale. And so all these campaigns will be fundamentally the same in terms of how they're structured, but they will have a very different approach in the way we reach out to people and the way we connect with them. Because in one instance, we're just going to go straight for the pitch and mention that we are interested in selling and acquiring their company. In another instance, we might just want to say, well, we're looking to collaborate with third-party firms that might have connections with business owners interested in a sale. If you happen to represent any company that has contemplated this type of solution, we would be interested in having a conversation, and we would be making sure that you can benefit from that too. So super complex in terms of audiences that we can target, but then the process of reaching out to them becomes very straightforward because it's basically the same for each and every one of them. And it is, as I mentioned, for on-market deals, multi-channel outreach that then creates a system and a cycle that enables us to touch these people multiple times across multiple channels without sounding like a spam guy or like a redundant AI message that is written over and over again, and it's just pissing people off, to be fair. How is that accomplished? Well, both for on-market and off-market deals, it's important to understand that multi-channel enables us to get a lot more flexibility, and that is what we implement when we source deals for clients, and what a lot of folks don't understand, right? They say, okay, I'm just going to source deals through cold email, and I'm like, yeah, fine, but after you blasted all the people in your industry for 4 or 5 times, what are you going to do? Are you going to blast them again? Most of these folks, if they're not interested, they're going to just mark you as spam, and then what do? So you might say, well, I'm going to reach out to them again in 3 months. Yeah, okay. But then what do during these 3 months? You just wait and, kind of like do nothing. That sounds very unproductive, and it creates a cycle that is not linear, and it goes up and down continuously, as I say, multiple times. And people wonder why their deal flow is not consistent. And that is exactly the answer, because their sourcing process is not consistent. And so they might be getting deals now because they put in effort 6 months ago, but then they stop putting in the same effort, and therefore that is going to reflect 3 months later in lack of deal flow. And they keep wondering why that is happening, but they don't realize the cause of it is 6 months before what they did or what they didn't do. So we build this multi-channel solution because then we are able to have consistency. For example, let's say we take the example of email. We start reaching out to folks via email, and we have a regular email outreach campaign segmented by industry, sub-industry, geography, company size, you name it. We're going to have portion of leads that reply positively, portion of them that don't reply, a lot of them that say no. And what's going to happen then? Well, we will segment the list. The no's are going to go out. The yeses are going to go down the funnel. The no replies might be stuck there forever until we want to email them again. Instead, if we have a multi-channel approach, we can funnel these folks into another channel of outreach. That might be calls, that might be SMSs, that might be LinkedIn outreach, social media outreach, letter campaigns, you name it. And we can keep doing that over and over again um, to accomplish a few different things. The first is we get to understand what is the channel where this person is more likely to respond. Very important, because not all folks are going to reply to our emails. Not all folks are going to reply to calls. So we don't want to make the assumption that the way we do things is going to work for everybody. We just want to test and find the channel of communication that works for that specific person, and that use that to build a relationship. Subsequently to that, we can create a continuous process where we show our interest in a very proactive way. And this person receiving our messages is going to see that we're actually genuine about talking to him, because we're not just blasting him via email or blasting him via phone call, but we try to connect in using different avenues. And that, historically, at least our experience has been like that, has been very well received by a lot of people, saying, well, you're actually the first one that tried to connect with me on 3 different channels. That's why you caught my interest and I'm willing to take a call. I was thinking about selling the business, but all the other guys just seem to be very self-interest and just looking to get a response from me with minimal effort. You instead went the extra mile and connected with me in multiple places. Thereby, you got my attention. That is huge. And if done at scale, can deliver tremendous results for anybody, even big private equity firms, believe it or not. That's the other benefit. The third benefit is that we can then fill the gaps between maybe email campaigns or call campaigns that might be your primarily source of deal flow, and still have continuity without sounding spammy, without sounding like a blast of messages to a list of people, and being relevant, highly relevant across channels. In addition, creating messages that resonate depending on the market cycle. So if we start an email campaign now, let's say we reach out to people, we have a bunch of no replies, then in 2 weeks time they go into a LinkedIn campaign. They stay there for 2 weeks, then for whatever reason we have no replies, we channel them into a call campaign. As you can see, we are stretching the cycle quite a bit, but it's not actually stretching it. We're just filling the gaps that would have been empty anyway, because if we just had one channel of outreach, we would have to wait until these leads could have been contacted again. And so we're doing that, and we're basically creating a very healthier system, because we are touching people multiple times, multiple places, and at multiple stages. And we're kind of like planting the seeds. Even if folks don't reply, they might be reading our messages and they might be considering an exit, believe it or not. We had folks that replied to us 6 months later saying, well, I wasn't thinking about an exit and I never replied to your messages, but I saw how persistent you were in how much value you added in the messages. This another thing. So I'm now interested in exiting, and you're the person who kept connecting with me for 6 months. I want to talk with you instead of other folks. That's huge. And that again applies for on-market deals as well. Brokers will react in the same way. So those are some of the advantages of building a multi-channel system. And again, for different audiences, we can build the same thing. The process will be the same. It will just be run for business owners, then maybe accountants, lawyers, wealth managers, for on-market deals, business brokers, investment bankers. The system will be the same. We'll just plug in different audiences and different messaging, and then we create separate funnels that nurture these leads. What we end up at the bottom is a series of people that are qualified and interested in doing a variety of different things. For investment bankers and brokers, it might be referring us deals before they hit the market. In terms of business owners, it might be a list of people that want to exit now, folks that want to exit in 2 months, 4 months, 6 months. In the case of wealth managers, lawyers, advisors, it might be references of companies they represent that they might want to exit now or in the future. And once we have that, we have kind of like a pool of people that are highly interested in discussing an exit, and then we can start filtering them. Variety of ways we can do that, and it can be a very generalized step, of course personalized depending on the audience that we're reaching out to, but it really needs to be tested, because again, as I said, people might be very responsive to a form, others might not be. We need to find different solutions to qualify folks and ultimately make sure we're having productive conversations with business owners. It all comes down to, again, your process and how you want to interact with people. There are some folks that say, I want to take as many calls as possible to understand the market more deeply. Others say, I'm not interested in that. I just want to take a few calls that are 100% qualified. So be very stringent in the way you filter things. Depending on that, you build your layering system and you add friction. And once you added friction, then you get the result and you see what comes at the bottom of the funnel. And you can then decide, is it working? Is it getting me the outcome that I need? Or is it not working? And that again is something that then becomes repeatable, because once you have it in place, it keeps running. And the only thing that you need to change really is adding new people that you want to reach out to, in adapting the message that you write to them, because that is going to need to be refreshed to maybe reflect some of the market conditions that are, that have changed, or just be more creative in the way you're reaching out to them. So you cannot keep the same approach for 12 months. That's not going to work. Again, you can hire analysts to do this shit, but I'm not sure they're going to be able to build something like this. In most instances, they're going to start banging the phones after downloading a list from ZoomInfo, or they're just going to start blasting emails after downloading a list from ZoomInfo and populate a spreadsheet with the results that they get, which sounds like a very limited way of sourcing deal flow. And don't get me wrong, that might get you results, but it might not be the type of results that you're looking to get. On the flip side, it might also be, to the same degree, it might be counterproductive for you to invest that much money into an internal resource that is not yielding you as much value as you desire. Maybe that person is better allocated towards closing deals with you and doing some of the work that should be done once a transaction is there. Or maybe you're better off not having that resource at all. And nothing against analysts, by the way. But the point is, a lot of folks don't realize how complex it is to find deal flow. And they don't realize one thing that I was discussing with a client of mine a few days ago. And he was saying this to me, and I kind of resonate with that. It's like, he said, Marco, a lot of folks don't understand that a lot of the stuff that they're getting into the funnel is just trash. And it is important to filter through that trash quickly. Otherwise, you're just going to waste a lot of time thinking you're talking with right opportunities. Well, instead, you're just wasting, money, time, resources. And that's true. And so instead of just having somebody internal that costs you a lot of money, go through that process. Have somebody external, at least that's my perspective. And of course, I'm very self-interest, but I don't give a shit. That's what we do. We source deals. So I'm going to tell you that we do know what we're doing, and we know how to do it better than analysts to some respect. We can take care of all the process for you, so you only get the final result. So you might say, yeah, but how do I know that I'm going to get the type of businesses that I want? How do I know that I'm going to get the right amount of companies that I want from this process? Well, in terms of the type of companies that you want, that's all about us clarifying what we put at the top of the funnel. Because if there is clarity there and you are very specific in the type of asset that you want to acquire, then we're not going to have any issues, because you give us specific criteria, we plug it into the system, we get the output that you desire. That's really as simple as that. And weekly check-ins can kind of like help us adapt and fix things as the market changes, because of course things vary based on the market conditions. But again, answering the second question, how do I know that I'm going to get the output that I desire, meaning the amount of motivated sellers, the amount of companies that I want? Well, I always kind of laugh when people ask me that question, because to my, in my experience and from my perspective, it shows a lack of understanding of the mergers and acquisition word and the acquisition word in general, because you cannot really tell how many people are going to be interested in selling a business at any point in time. Yes, you can make assumptions and you can create a system that has a higher likelihood of delivering result, providing folks are interested in that. But we cannot make people interested if they're not. And that's really one of the key things that people are missing when building these pipelines. They feel that just because they built something right from a technical perspective, then results are automatically gonna come. But that's not that simple, because again, it's almost like, I mean, we're talking about a life-changing decision in many cases when people want to sell their company. And that is not something that, people are interested in one day or another. And, a lot of folks are going to be interested in every single day. It's more like a mature decision that people get to or arrive to after a series of consideration and maybe years of being in that business. And being delusional into thinking that just because we have something that is technically perfect, we're going to get a lot of folks at the bottom of the funnel is just delusional. And that's why a lot of folks end up with tire kickers, by the way, because they built a system that they consider perfect. In reality, it is not, because very few people build systems the way I just outlined. But they build their system for originating deal flow, and then they try to make a prospect motivated. And that is just a terrible mistake. It doesn't matter how much money you got and how hungry you are to get a deal done and make acquisitions. If the guy is not motivated, you're just wasting your time. And a lot of people that I see are building pipelines that do have that kind of like, they are building the pipeline incorrectly. They're building a pipeline of suspects instead of prospects. And that's really the bottom line. And we cannot influence that in any way, shape, matter, or form. The only thing we can do is build something that is right and that can deliver a certain outcome, provided the people that we talk with are interested in selling. And one of the ways that you can solve for that is like creating these long cycles that I mentioned, where you tap people on the shoulder over multiple months, because you don't really know when the guy is gonna think about selling or when he's gonna make the decision to sell. And we wanna make sure we're always there, kind of like waiting and kind of like being top of mind, so that the guy, once he decides it's time for him to go, we're the first person he's thinking about. And a lot of times I try to explain it to people, but probably they're too logical to understand this. Literally, one thing can change in the life of a business owner that makes them say, I'm done with this business. So it's like, everything is fine. My business is going well, making a lot of money. I'm happy. I'm just going to run it for the next 10 years. If you reach out to me today, I'm not going to entertain the offer. No, I'm not even going to answer to you. 1 week later, my child is diagnosed with a terrible illness. And I want to spend all my time with my child and with my family. That becomes my top priority now. Wow, all of a sudden I want to get out of this business. The mental shift that happened was sudden, and it happened in a very short period of time. And there was nothing logical about it. It was just an external event that made the situation change. And we cannot predict that. But what we can do is be there, knocking on the door multiple times in a very polite, organized way, so that we can add value and keep being relevant to the guy. But being there so that once something happens, and it doesn't have to be a terrible event like the one that I just mentioned, but maybe, a shift in his mindset, maybe the business, he realizes he doesn't want to go through that mental process anymore. He's just realizing he's burned out. Maybe he sees an ad for a tropical place and he decides that's what he wants to do, and he's going to relocate there forever. So we cannot predict when these things are going to happen and when that decision will be made. But what we can do is, one, make sure people know that we are interested, and two, cultivate that over time so that once they decide it's time for them to go, we are the first people they call. And so this is kind of like how we build pipelines, right? It's a constant process. It's not something that you go out, you attack, and then you fall back and you get the results. You close one deal and then you need to start all over again, because then you have inconsistency and you're going to wonder why sometimes nothing is happening in your business and other times you get very abundant deal flow. And this is something that is true for a lot of folks, right? Even private equity groups that I talk with sometimes have these issues. In some instances also have other issues because they don't allocate capital, because they don't see assets they like. Then they get to the last quarter, they haven't allocated the capital, but if they don't allocate it, they're going to have problems. So they need to show returns. They want to buy businesses on a short time frame, and maybe they become less stringent with their selection criteria. All that can also be solved if you built it right in a strong pipeline beforehand, right? And your network alone is not going to fix that. Your experience and your connections are not going to fix that, because there are only so many connections and network that you can have. It doesn't matter how confident you are that your people are going to give you the deals that you need. There's still more that can be found. Okay, if we're talking about $500 million plus transactions, maybe the circle is very small, fine. But we're not focusing on that. We're focusing on deals sub 100 million. And over there, there's a lot of companies that can be found. If you're buying businesses for 10, 20, 25 million, there's a lot of them. And your network is not going to know all of them. So that's kind of like how you can find lucrative businesses for sale. An organized process, both on market and off market, that targets multiple audiences in a different way, but then uses the same consolidated system to nurture them and build short, medium, and long-term results. And that's what we do with folks. And we're basically their M&A partner for origination. People pay us a lot of money for what we do, but considering the fact that you're acquiring multi-million-dollar deals, what we charge becomes de minimis, in terms of the results that you get, in terms of the returns that you get. Because again, there's probably not another business that can deliver such an incredible return, where for tens, thousands of dollars, you can buy businesses worth millions. It doesn't get any better than that, really. But most people don't realize it, right? They want the easy way out, and that's why they make less deals. They close less deals, or they build everything internally, and they don't realize they're paying much more than they should be paying, because they're investing both more money in hiring a resource, and two, they're committing their time into training that. So that's 2 times the expense. But again, that's not for me to tell. Again, this was like an initial overview of how you can source profitable businesses, building these systems, starting from the bottom and going down. There are a lot of things that we can discuss for all stages. And basically everything is a variable. It depends on the type of assets that you want to buy. Based on that, it can be structured and organized in a way that can deliver results for you. So if you're interested in that, click the links below. We don't generally have a lot of engagements going because, again, we're very bespoke in our approach. So generally the wait time is quite long, and we only take a few clients that actually fit our criteria. But provided we have slots available, my team will see if we can find time to work together. And yeah, that's pretty much it.